Good day, and welcome to the Relaxo Footwears Limited Q2 and H1FY23 earnings conference call, hosted by Motilal Oswal Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Asghar Shakir from Motilal Oswal Financial Services. Thank you, and over to you, sir.
Yeah, thank you so much. Good evening, everyone. On behalf of Motilal Oswal Securities, very happy to host the senior management of Relaxo Footwears for Q2FY23 earnings conference call. Welcome all to this call. From the management, we have with us today Mr. Ramesh Kumar Dua, Managing Director, Mr. Gaurav Dua, Full-Time Director, Mr. Ritesh Dua, Executive Vice President, Mr. Sushil Batra, Chief Financial Officer, and Mr. Vikas Tak, Company Secretary. I'll hand over the call to the management for opening remarks, and then we can open the floor for questions. To you, sir.
Thank you, Ali. Good afternoon, ladies and gentlemen. Thank you for joining the Q2 and H1FY23 earnings call of Relaxo Footwear Limited. We have already uploaded our earnings press release and presentation at the exchanges, and we hope you have got an opportunity to review them. Before we open the floor for question and answer session, I would like to take you through an overview of the number of Q2 and H1FY23. During Q2 FY23, the company reported total revenue of rupees 670 crore as compared to rupees 714 crore in Q2 FY22, registering a decline of 6.3% year-on-year. The performance remained subdued mainly on account of fall in volumes in Q2 FY23 in the categories serving the masses, with consumers facing inflationary pressures affecting affordability. There has been a shift in consumer habits as they move toward cheaper alternatives at the cost of quality. This prompted the company to take an aggressive price correction in September 2022 to remain competitive in the current market. This price rationalization approach has been welcomed by distributors and customers, which would help us clear high-cost inventory in the coming quarter and ultimately improve our volume number going ahead. EBITDA in Q2 FY23 was at rupees 59 crore as compared to rupees 117 crore in Q2 FY22. This degrowth in EBITDA was mainly due to steep increase in raw material prices. EBITDA margin during the Q2 FY23 was at 8.9%, declined by 748 basis points year-on-year. The profit after tax was at rupees 22 crore in Q2 FY23 as compared to rupees 69 crore in Q2 FY22. Moving to our H1 FY23 performance, the total revenue was at rupees 1,337 crores and grew by 10.3% year-on-year as compared to rupees 1,212 crore in H1 FY22. EBITDA was at rupees 146 crore from rupees 183 crore in H1 FY22. The company reported a profit after tax of rupees 61 crore in H1 FY23 as compared to rupees 100 crore in H1 FY22. These strong fundamentals, complemented by a wide distribution reach, strong brand recall, and better sourcing capability, we are optimistic about overcoming this tough phase and focus on delivering steady revenue growth in both domestic and export making going forward. Thank you. Now we can open the floor for questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Gaurav Jagani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. So my first question is with regards to the sharp volume decline that we have seen. And you have also mentioned that you have taken aggressive price cut in September 22. So one, if you can highlight what is the quantum of the price cut that you have taken and how much of that has impacted the initial volumes? Because, we understand that your distributors would have destocked initially, and because of which also there will be some volume impact.
Yes, I am Ramesh Kumar Dua this side. Just in the background, I want to tell you a few things. The main cause of our price increase in the past for 1.5 years has been some of the raw material polymers like EVA, PVC, polyethylene. They started gradually rising and kept on rising. To an extent, a thing which we were getting at 120 rupees a kg reached 300 rupees kg. And then it started falling also. And it came down to 160. So in such a kind of volatile situation where our company has to maintain a long supply chain because materials are imported, it has to be at least 6 months supply chain. So when the things rise, then it is beneficial for the entire trade company and our customers. But when there is a sudden fall, which historically, at least I have never witnessed, such a fall from 300, a thing becomes 160. And local market becoming cheaper than the international market at which we got. Our way of pricing the products has been based on our costing. But now, during this period, when the local raw material prices became lower than our cost prices, the local industry or other people who are always sourcing their material from local sources, they became competitive. And also, the affordability of the mass segment, that has been affected because of inflation all around. As a result, for our mass customers, they started shifting to cheaper products, never mind the quality. Whether it lasts 2 months or 3 months, they are not bothered. They just want to while away this difficult period which they are facing for inflation. So, when the prices were rising, gradually we are forced to revise the prices upward. But when the raw material started falling or it became cheaper to the competition, they reacted very fast. But as far as our company is concerned, which has a long supply chain, we took our own time. Meanwhile, because of unaffordability of our article to the masses, they went for cheaper alternatives. So that started affecting our sales. Now in the month of September, we have made some price correction so that we are competitive in the market. Never mind, it will affect our bottom line. But to be in the market, have volume sale, that has become very, that is a kind of a cautious call to maintain our market share in the market. So that has been the reason. Otherwise, if I want to tell you the gravity of the thing, EVA polymer, we are consuming around 1,000 tons per month. That is in a year, 12,000 tons. And the material of this, which was 120 rupees kg in 2021. And last year, for the year, it became average 210. 100 rupees kg. If you can see a difference, 100 rupees kg, 12,000 ton, 120 crores of effect because single material. And even in this another 6 months, this year also, our average has been 240. So this is the magnitude of this thing which we say average is 240, but in local it became 160. So they became more competitive.
Sure, sir.
Took this aggressive or to be in the competitive. But in the coming months, although things are not still stabilized, the 160 which was coming to local now it has become 200. So things are very volatile. We are keeping an eye in the market, and we will keep on taking timely corrections, keeping in view how the other markets are reacting. That's it.
Sure. So just to follow up on this one, so one, what is the magnitude of price cut that you have taken in September? And second thing, sir, now because you're saying now the local markets again, that price has become 200 rupees per kg, and you might be having some inventory because of this. So now does that place you better versus the competition because you have some earlier inventory also with you?
Yeah, no, generally our supply chain is around 6 months.
Cut is around 20%, 15 to 20%.
The price, so that you call it, price correction has been around 15 to 20%. Our main segment that is affected is Hawaii and EVA segment. Other PU related footwear and spark shoe, that is not affected. That has grown also and it's okay also. It is only where EVA polymer is being consumed. They are in our Bahamas brand, Relaxo, and also flight EVA category. There our company has suffered because of this volatility. The volatility, even, earlier, we were able to say, okay, next year what will be the price of this material? We were able to predict. But now our purchase department is not able to tell in guarantee what is going to be the price next quarter. Such is the kind of volatility and instability. So under such volatile, chaotic conditions, things have become quite challenging. And now we are keeping a close watch on the market and taking timely correction, not based on our costing, but based on market conditions.
Sure, sir. And sir, one last question from my end. Sir, what would be, what we are seeing a dichotomy, in terms of consumption in footwear at least is, that the premium and the mid-premium segment continues to grow well. You have highlighted that, for you, the Sparks and the sports shoes, are relatively unimpacted. So according to you, what is driving this difference, wherein the sports shoes and the higher segment is growing, but, people are not able to afford the lower end of the segment?
Well, you all know richer are becoming richer and poorer are becoming poorer. This mass segment, his affordability has been affected. And that was our quite a big share of business.
Plus, rural market in India, they're really suffering. If you read the Economist and today also, even Hindustan Lever is facing heat because a lot of inflation in rural market. So the purchasing power in rural market is more affected than urban India.
Oh, sure. And sir, anything that you are doing, in terms to, cater to that, the demand that is shifting towards a bit, I would say, to the premium and the mid-premium segment. So what is the company's, efforts on the same, and how the company is looking to make more from it?
We are focusing on our other categories which are doing well.
Interrupt members of the management team. Sir, there's a lot of disturbance from your line.
From our line?
Yes, sir.
Just hold on. Let us check.
Thank you.
Is it better now?
No, sir, it's still the same. The audio is cracking, actually.
Is it better now?
Sir, no, it's still the same. What I'll do is I'll just disconnect and I'll reconnect you.
No problem.
Ladies and gentlemen, please stay connected while we reconnect the management team. Ladies and gentlemen, thank you for patiently holding. We now have the lines of the management reconnected. Over to you, sir.
I think I have concluded. Now we can go for next question.
Thank you. The next question is from the line of Bharat Choda from ICICI Securities Limited. Please go ahead.
Yeah, thanks for the opportunity, sir. Our cost of goods sales for per pair has been around 60 to 65 rupees over the last few quarters or so, and then probably this quarter it has gone to 88 rupees per pair. So in the ensuing quarters, do you see like in Q3, Q4 that could come down to between 75, 80 or even lesser than that? Do you see that possibility?
Yeah, although raw material conditions are quite volatile, but we have long supply chain and we have a lot of goods purchased at higher prices of the last year also. We are carrying inventory. But in this quarter, that is October, November, December, I think all that old inventory will be flushed out. And January, February, March, there our cost of production will be definitely low and things will be better.
So probably from Q4 onwards, we would see normal gross margin kind of things returning?
Things will start improving, top line will start improving, but at the same time, we have to keep ourselves, what you call it, competitive and relevant as per the market. We have to also be very watchful. What is the affordability of the mass segment? Accordingly, we have to take corrective action timely.
So this high cost inventory will be there for one more quarter at least?
Yeah, at least. This quarter it will be flushed out. Okay. By November or maybe December by all means.
Okay. And sir, our raw material prices, what was the peak level that was there, and from a percentage increase on a YOY basis, and from there how much it has fallen down right now? If you could give a benchmark on that.
Yeah. A thing which was 120 rupees, it's gone up to 300 rupees.
Okay.
And now it has become 200. That is the kind of volatility you can understand.
Oh, okay.
And consuming 1,000 tons a month. Just understand.
Yeah.
Consuming 1,000 tons a month, you can understand the volatility and the effect.
Mm-hmm. Okay. And sir, how is this higher end segment doing? Like you said, it is growth in that. So what kind of growth are we witnessing in the shoe segment or something? Any color you can provide on that?
Yeah, Gaurav will tell regarding sales figures.
So in shoe division, our growth in last 6 months is around 30%. So there is a healthy growth coming in shoe division, which is sports shoes and sports sandals. So that has grown well, but open footwear, which is Hawaii, that has degrown.
So what is the quantum of degrowth over there, Hawaii?
That is also around 20%.
This you are speaking in terms of volume, no, sir?
Value.
Okay, sir. Thanks a lot for answering my question. Thank you, sir.
Okay.
Thank you. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is, I think, in continuation to what was being asked earlier, is if you can just break up your volume or revenue and just give us some directional view in terms of how is the performance of some of the lower end categories or price points versus some higher end categories.
Lower end category.
Yeah. Actually, the out-of-home category, which is sports shoes, formal slippers, that has grown well. And indoor, we have Hawaii and Flight EVA, that has degrown. So now after lockdown, there has been a shift. People are going for more premium out-of-home categories. So that is growing well. But in Hawaii segment, we are feeling the heat. Facing the heat.
Out-of-home would be what percentage of your revenue?
See, in out-of-home also, we have Flight category in which we have EVA and PU. So PU is more than 50%. So that is going more. If you say open footwear. But if you add Sparks is also giving more than 41% contribution to our total business. That is growing at around 30%.
Okay. And what would be the average selling price for the socks category and the shoes category?
If you sports shoe, every category is different. Like sports shoe has around 800 plus ASP, and sandal is around 500 plus ASP.
Good. And my second question is just in terms of your price and margins. So given you recently taken the price cuts, give some directional view on how do you see the price direction and how should we what margins?
Your voice is not clear. Your voice is not clear. Can you?
Mr. Parekh, your audio is breaking up.
Yeah, sorry. Is this better? My question was on pricing and
Sir, may we request that you use the handset mode while speaking? Your audio is not coming clear to us.
Yes, sorry. Hi, is this better? Sorry, am I audible?
No, sir, it's still the same.
Okay, I'll join back.
Thank you, sir. The next question is on the line of Priyam Khemawat from ASK Investment Managers. Please go ahead.
Yeah, hi sir. Just wanted to understand, you alluded that price of polyurethane has moved from rupees 120 to 300 per kg and then again falling back to 200 per kg. What percentage of raw material is this for us?
What you want to know? Consumption of the material.
Breakup of a raw material in terms of what percentage of raw material is this component?
Easy. That is different in category wise. You will not be able to make anything out of it. I just told you our total consumption of this polymer is around 1,000 tons a month. And the volatility has been 120 to 300 and then 300 to 200. How much is it? 20% is the consumption of EVA in the total cost of the materials.
Okay, and if you could give some color on what are the other components in a raw material?
Yeah. There are so many other materials. The EVA is there, PVC is there, these are the major polymer, natural rubber is there, EPDM is there. There are a host of so many materials. But the main reason has been too much fluctuation on these four key materials: EVA, PVC, low density polyethylene, and some natural rubber. That's all.
Okay, so that helps. Sir, and you alluded to a 6-month supply chain cycle and most of the raw material imported. Now that we've seen that this raw material can be so highly volatile, anything we're doing to reduce this import component and reducing the supply chain?
No, we can't depend upon local sources. Otherwise, our factory will not be able to run. Local source availability is only meant for small manufacturers, small. If we go to the market, the rate is out of control हो जाएगा local में, because our 1,000 ton nobody can match. So we have to maintain this kind of supply chain so that there is no disruption in the manufacturing process. It is only this is one time in a life phenomena if things have fallen. Otherwise, it has always kept our company in a very healthy position.
Understood.
It has been always beneficial.
Got it. Sir, and did I hear it right that Sparks is currently at 41% revenue contribution and it is growing at around 30% for us?
Right.
So despite that 41% component growing at 30%, our sales have declined around 7% this quarter. So the other part, which is 60%, has declined that steeply.
Yes, you're right. So there is a factor, the Hawaii factor, the EVA factor, what we are doing in Hawaiian flight, that has degrown a lot. So whatever gains we are getting from shoe division is getting nullified, so that's why the 10% growth is coming. And in this quarter, it was not that also. Because of too much range and, the market was not responding.
Understood. Sir, and our ASP right now is trending at around 169. Can you give us what, because 41% is Sparks, you alluded to a 800 ASP and 500 ASP for sports shoes and sandals respectively.
We need to correct that. That is 800. That's if you take as a Sparks, we have 437 as ASP. 450 you can say.
450.
It has yes, 450 rupees. All categories put in Sparks.
Understood. So going ahead, should we assume that since Sparks is growing at such a high pace, our ASP structurally will move towards rupees 200 to 250 in the coming years?
It will be increasing, but by how much we have to see. The ASP will increase.
Okay, sir. Okay, got it, sir. That's all from my side. Thanks.
Thank you. The next question is from the line of Harsh Shah from InCred. Please go ahead.
Yeah, hi. Thank you so much, sir. So my question is, we have made a press release where we have stated that we have cancelled some 15,000 stock options under our ESOP plan to 5 employees because of their resignation. So just wanted to inquire here, are these senior, mid-senior level exits, and when have they kind of resigned? Is it the near term or a kind of that perspective, sir?
Really, we give the ESOP to our AGM and above. There are 110 people in that category. So out of these, 5 people have left the company and one was retirement case. So these are the mid-level, senior mid-level you can say, and they have left.
Okay.
That's why we went.
So this is basically exit by retirement?
Some retirement and some people left voluntary at their end.
Okay. Thank you for clarifying that. And second is, sir, what is our current capacity of Sparks and what will be our capacity of Sparks in next 2 years?
Currently, it is around 50,000 pairs a day of this Sparks, and which we are increasing the production to 100,000 pairs a day.
Okay, and that will be, that will come, operationalized by what time, sir? Approximately?
April onwards. Next April onwards.
Okay, so we should be able to double our capacity in next 6 months, basically.
Correct.
Okay, and sir, then what would be our capex outlay for FY23?
FY23, our capex will be around 120 to 140 because we have already placed the order. It is in pipeline, and we have added some back-end operations also, and including all these molds and so many other expenses on building part. It will be in the range of 140, you can say, FY23.
Okay. Thank you so much.
Thank you. The next question is from the line of Ali Asghar Shakir. Please go ahead.
Yeah, thanks a lot, sir. A couple of questions. First is on your sportswear. So if my understanding is correct, out of about 20% of closed footwear, about 50% is sports and athleisure, right? Which should be somewhere about ballpark around 250 odd crores. So just wanted to understand, what are our plans there, a few of the recently listed companies and in fact, overall market also, a lot of smaller players have, rapidly grown in the recent past. So what are our plans here? I think we recently also added capacity in the sportswear. So, how do we plan to grow this business over the next probably 3 years, if you could share your insights?
So this sports shoe segment, this is divided into online sale and distributor sale, the channel sale. So in both channels, we are seeing a good demand coming from the market, and that's why we have added the capacity there only. And we are adding more designs every year. Like, this year also we have added a lot of designs, and we are giving a lot of trust to, a placement of products in the market. So we are expecting a good growth also coming from the Spark segment, especially sports shoes.
Okay. So could you share, what is our plan over 3 years? If you could, share some number, what kind of growth we can expect here, given that, there are players who have reached upwards of 1,500 crores kind of revenue, and we certainly have a very deep distribution reach. So should we able to, use our existing distribution reach, or sportswear requires a different reach, and therefore, it should be a very slow growth business?
No, this won't be a slow growth. We are growing at 30% and will continue to grow more than 30% year on year in this category. And the demand will come from both channels, online, offline, both.
Understood. And is the number that I shared about 50 to 50 odd crores from the sportswear number correct, or is my understanding?
That is only typical sports shoes, which we did last year, 250. So definitely we'll grow from here. Yeah.
Understood. And this second question is on the inventory situation. So given the fact that you have taken price cuts, you would obviously have a lot of inventory yet in the system, which is at a higher price point. So, by when do you expect that inventory to get unwind, and, then you should only have, one price point or lower price point inventory available in the market?
At company level, I think by December end, we'll be able to clear almost all the inventory of old prices. But it will go to the retail end, that will take 1 to 2 months more at the retail level. So it's a long supply chain. Company can get over quickly. But at retail and distributor level, it will take time, maybe 2 to 3 months more. So by March, I think it will be everywhere in the new prices.
Got it. So far, whatever is the current price point, we should be able to normalize our inventory by probably March, unless we can have some more volatility.
Correct. But from company point of view, by December, we will be clear.
Got it. This is very helpful, sir. Thank you so much. I'll come back in the queue.
Thank you. We'll move on to the next question. That is on the line of Ankit Kedia from Phillip Capital. Please go ahead.
So the price cuts of 15 to 20%, which you alluded in the open footwear category, is it in line with the raw material price deflation what we have seen, or the price cuts are more towards volume protection and not towards RM fall, which you have seen from average perspective?
Price this revision has been taken keeping in view the local market conditions, affordability of the consumer, and what is the competitive environment. To be competitive, we have brought these prices, and we have to always remain competitive in the market. That is what we have done.
So is it fair to assume that the price cut is more than the RM deflation which we have seen in the market, and hence the gross margins could bleed actually because of this?
This gross margin will be under pressure till December. I think we'll start looking up in January onwards. But one thing I must tell you, the raw material situation is very volatile. You can't even predict in January, February, March at what rate we'll be buying. Based on whatever we have in supply chain and what we are making current buying arrangements from international suppliers, we are able to tell today.
So let me put it the other way. So if the RM increases, we will continue to maintain our prices to gain volumes and not increase our prices further.
That is a very strategic viewpoint you are raising. We have to watch the market condition at the same time. Whatever is the market environment, accordingly we have to respond.
Sure. So my next question is, on your sports footwear. So from the current, MBO retail network, how much is for the closed sports footwear? If you can share that, and over the next 2 years, because we're expanding capacity, how much is coming predominantly for online? Are we going to have a differential product like some of our competitors have for online, where we will focus more, or it's going to be fungible between online offline as the demand comes in?
Currently, we have same portfolio, but going forward, we'll have different portfolio, especially SMUs for e-commerce and different products for the offline, because we want to control the prices. There's a lot of sometimes price war. One channel giving more discount than what we have heard in this big billion day. So we are going to change our strategy and making SMUs for online channel.
And sir, how many exclusive MBOs do we have for Sparks out of the 60,000 retailer network which we have?
Also.
You're talking about wholesale, or you're talking our own retail outlets?
No, sir, wholesale, sir.
Wholesale. See, what we have, we are going currently to 50 to 60,000 outlets. We have a data of 90,000 outlets. In that, 10,000 outlets we are covering through Sparks.
And so over the next 3 years, what is the target? What is the potential for Sparks for these outlets you feel, given that open footwear will obviously be more? So, and how do you plan to target the South and West market for Sparks?
Sparks does well in South and West. Already we are doing good in South and West. Now we have to do good in East and North. It's the other way around. And this 10,000 outlets definitely will increase to 15 to 18,000 outlets in the next 3 to 4 years.
And sir, one last question on the online side. Today online, last year was around 12% of your revenues. What is the target, given that the strategy is going to be more focused on online over the next 2 years, predominantly for the closed footwear contribution from online?
See, 12% is all brands put together. But if you take Sparks, it will be more than 25%.
And over the next 2 years, sir, what is the target, given that we'll spend more on online?
Definitely, our this 12% contribution will increase to roughly around 15% in 2 to 3 years' time. And this 25% will also increase what Sparks we are doing.
Sure. That's helpful, sir. Thank you so much and all the best.
Thank you. The next question is from the line of Mithun Soni from GEC Investments. Please go ahead.
Yeah, thanks for the opportunity. Just wanted some clarifications. How much of our revenue comes from the EVA-based products? Because that's where, from what we understand, is where the maximum pressure has come because of the long supply chain.
Around 50%. 50 to 60.
EVA-based products, because that's
EVA consuming as around 50 to 60%.
Okay, so this will be even, and out of the 50 to 60%, how many of this business would be like where will be at a reasonably priced products like Hawaiis of the world, and where it is at the mass segment? Because that is where you would have faced the most of the pressure in the or you have faced the pricing pressure even in the Hawaii category.
We have faced this pricing pressure. There is Hawaii, which comes under brand Relaxo and Bahamas, and also EVA coming under Flight brand. These two categories we have faced this problem.
And the price correction 15% has been taken across the entire portfolio of 50% or 60% of the EVA products.
No, yes, EVA and Hawaii segment we have done the correction.
EU and sports shoe we have not done any correction.
So for 50% of the products of the total sales, say 50%, which is that we have taken a correction. For the PU wear and sports and Sparks, we have not taken any price correction.
Yeah. And one more very important element we are missing is that GST has increased from 5 to 12.
Correct.
So that also has impacted a lot. In this lower segment, 5 to 12, that has also impacted. Raw material plus GST.
Correct. And second thing, as one of the participants asked, that there is a clear shift. What we are seeing that the premium, the semi-premium has been doing well, and versus the mass segment has been facing the pressure, and there is a market which is moving over there. So what are the things we are doing to promote and to expand the share of the semi-premium and the premium category for us?
We are increasing the capacity of our sports shoe manufacturing capacity. We are doubling of the capacity, and we are also focusing on online sale. Online sale is maximum of
premium and these segments only, not slippers or lower price articles. That is what
How would you price how would you say Hawaii? How are they priced? Hawaii, they are also priced at the semi-premium, or even they are also priced at the mass pricing?
Hawaii is meant for mass segment.
Okay. So 50% of our business comes from the premium and the semi-premium segment is the way to look at it.
Yeah, almost.
Okay. So, and given that we have our own 400 store outlet distribution, any plans on that front? Like, what are the things we are looking to do over there to promote our products of the premium category?
Well, our retail outlets, they are doing well, and we are trying to see if need be, we'll do the expansion on that front.
Okay. But you're looking to do expansion in that front, I understand.
We are watching how much business we can extract. After all, retail is contributing to around 8% of the business. So strategically, our idea of putting a retail outlet has been to showcase all of our products. Correct. So that we understand how it is the consumer behavior, and then we spread across multi-brand outlets. It is not the main, it is just our 8 to 10% of the business.
Correct. Okay. Thank you very much, sir.
Thank you. The next question is from the line of Divyata Dalal from Trident Capital. Please go ahead.
Yeah, thank you for taking my question, sir. I wanted to understand what would be the breakup of open footwear and closed footwear in our revenue for this 6 months.
It is same like what it was last year. It's around 80% open and 20% closed.
Okay, so Sparks would be a part of the closed footwear, or some part of it will also be open?
Yeah, it has both. It has open and closed both. Open is sandals and closed is sports shoes.
Okay, fine. And in terms of our press release, we have mentioned that since we have taken the price cut, it has been welcomed by trade and consumers. So are we seeing some kind of volume uptick till now in Q3? Like, have you seen after taking price cut in September, has there been some increase in volume on the Hawaii side?
Yeah, it is helping. It is happening, and in the month of November, it will be much better. Because there is old inventory also in the system, it will take some time, but things are very promising.
Okay, so in terms of volume for next quarter also, we can assume that 80-20 would be the breakup of open and closed?
Yes.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Harsh from Merciless. Please go ahead.
Hello. Yeah, hi, sir. So traditionally, we have been strong in the northern and the eastern market. However, in the Sparks category, we are just starting in the northern and eastern markets. So are we facing some headwinds in these two markets?
No, can you repeat the question?
Hello, yes, sir. So traditionally, Relaxo has been very strong in the northern and the eastern market. However, in the Sparks sports shoes category, we are just starting off. I mean, majorly our revenue is coming from the south and the western market. So what are the specific headwinds that we have faced in these two markets? I mean, why are we not big even right now in the northern and the eastern market in Sparks sports shoes?
North also, we are focusing, and North is a little more competitive market than South and West. All manufacturing base of footwear is this side. In North, West and South, there were no manufacturing bases of sports shoes and all that. So we got an easy entry into that market. But here it is in the North side, environment is a little more competitive. But we are focusing, and I think things will be improving here also.
Okay. Thank you.
Thank you. The next question is from the line of Akhil Parekh from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. My first question is, would you be able to quantify how much of the EBITDA margin erosion in first half of the year is because of the inventory losses?
There is no, I think, effect of inventory on the EBITDA margin. It's mainly raw material prices that is hitting. Otherwise, generally we never sell any goods below cost. It has never happened. So whenever we either decrease the prices, but it is never below the cost. So impact upon EBITDA is mainly due to the raw material prices.
Okay, got it. And so second question is on the price hikes we took last year.
Sorry to interrupt. Sir, we are not able to hear you clearly.
Just one second. Is it better now?
Yeah.
Okay. So the price hikes we took last year, right? And the channel feedback was suggesting that, some of our bigger competitors have not taken the hikes in quantum to what Relaxo took. So has the shift happened from Relaxo to the other big competitors, or have they gone largely to the unbranded segment?
It is mostly unbranded who are offering cheaper products, cheaper quality, and still the affordability of the consumer had gone down. So for the time being, they shifted because their affordability was not there. That was one of the reasons.
Okay. So we have not lost market share to any of our bigger competitors, right? Would that be a fair understanding?
No, not at all.
Okay. And then third and last question is on the volume front. If I look at volume from FY19 and probably for next year as well, broadly they have stagnated at around 17 to 18, 19 crores. Is there any saturation which we are seeing in terms of a volume growth? Because the volume growth is kind of missing. I understand the pandemic was there, but which has been actually good for us. But if I look at last 5 years trend, FY19 to say 22, 23 as well, the volumes are by and large muted. So anything if you can highlight on that?
Yeah, when people were not moving around, outdoor footwear was really totally stagnant or lowest. But these kind of footwear, people were, indoor footwear, these kind of things were more. In the lockdown, there were a lot of people who were out walking, going to villages, and so all of a sudden too much demand had emerged. That was one of the reasons. But now things will, I don't say, maybe this year things may stagnate, but next year again we will have growth.
So like peak volumes we did in FY21, which is around 19 odd crore. So would it be fair to say we will probably cross that number in say FY24, that is next year?
I hope so.
Okay, so got it. That's all from my side, and best wishes for coming quarters.
Thank you. The next question is from the line of Viraj from Banyan Tree Advisors. Please go ahead. Viraj, your line is unmuted. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Anush Mokashi from Yadnya Academy Private Limited. Please go ahead.
So my question is around the EBOs. So basically what we are looking at is there is a decline in the EBOs. Those were 398 as of March 21. Those have declined to 388 as of Q2. So can you please help us understand the reasons behind that?
We generally are maintaining at 400, but sometimes few stores which are not doing well, then we rationalize and then we put new out stores.
Okay. And can you share any guidance on maybe over the years?
Sorry to interrupt, sir. Your voice is breaking up, Mr. Mokashi.
Am I audible? Hello?
Sir, your audio is breaking up.
Is it fine now? Hello?
Sir, slightly better. Please go ahead.
Can you share any guidance on any EV over the next few years? How much are we looking at?
We are presently maintaining around 400. That is what we would like to have this year. 400.
Okay. And essentially, do we have any plans to go international with these EBOs opening up? Any guidance on that?
So we are already exporting. Our share of export is around how much? Yes, I know. 4%. 4%.
Opening up maybe Sparks EBO.
No. Internationally, we are not opening any our EBOs. It is only domestic that we have exclusive for our brand outlets.
But as a test marketing, what we are doing is we are opening the stores in few countries through our distributors. So to check the consumer taste there of our style, what we are promoting here. That we are doing in few countries. And eventually we will take a call how to go about it.
Okay. And just wanted to confirm lastly, probably the EBO margins at the distributor level are much higher than the retailers or slash NGOs we have. Am I right?
Sir, your voice is not very clear. You have to repeat it.
Sorry, apologies. But I'm assuming that EBO are much higher than the MBOs or the retail outlets we have. Am I right in my assumption?
You mean multi-brand outlets?
Yes.
Yeah, exclusive brand outlets. What do you say? MBO. How many number of you want to know?
No. My question is around the margins. Basically, the margins to which we get at the EBO level, the distributor margins. Those are much higher in the EBOs compared to the MBOs.
Definitely margins are higher, but because you have to do so many expensive rental staff and so many things, so MBO is a different model. They have their own shop or just proprietaries running the shop. So we give margin around 30% to the MBOs, and then they pass on some discount, and they are earning around 25-30%. So that is more profitable. But in case of EBO, yes, definitely there are margins are high, but expenses are also high.
Oh, okay, sure. Thank you so much. That's it from. Thank you so much.
Thank you. The next question is from the line of Manish Poddar from Motilal Oswal AMC. Please go ahead.
Yeah. Hi, sir. Thanks for doing the call. So, a couple of questions. First is, what is the total capex for FY24 and 25?
24-25, say we have been, I think, spending around 80-100 crore every year. So this year, FY23, we have planned around 140. So 24 and 25, it should be around 80, 100, between 80 and 100. It's an ongoing capex. We have always to expand.
Okay. And in terms of, just on this, when you say you have not lost market share, how do you get a gauge on that?
Sorry, we have not lost the market share. Next, what do you say?
You mentioned on the call that you have not lost market share. So I'm just trying to understand, how do you get a gauge on that? Do you track shelf space? How do you get a sense of that? Just trying to get an
We have our sale officers. We have more than 300 sale officers visiting 50,000 outlets. So we keep a track, the primary sale, the secondary sale, the shelf space, and what we are seeing, the volume degrowth in Hawaii and EVA category. So that clearly mentioned that the shelf is being taken by unorganized and unorganized players.
But now we are getting back.
Yes, definitely, after taking price correction.
And just one last one. So, is the demand environment at the bottom of the pyramid really that bad? Because when you look at a couple of data points, let's say, price increase taken by, mobile players, or you look at a couple of online guys in apparel, doing really well, somehow that thing doesn't add up. So
because if you just read today newspaper Economics Times, clearly mentioned rural India big pressure by Hindustan Lever, ITC, all. Rural India is really under pressure there because of inflationary pressure, and urban India is doing really well. That you can easily see that. all urban brands, urban consumption is there in mobiles or in automobiles. But rural India, we are seeing a sharp decline in consumption also.
Okay, fair enough. Thank you.
Thank you. The next question is from the line of Abhishek, an investor. Please go ahead.
Thank you for the opportunity. So I have a couple of questions. My first question is around, as you mentioned the opening remark, right, that the EVA prices in the domestic markets are around 200 kgs now, 200 per kg. So does it mean that now there is an even playing ground for us and the other unorganized players?
Yes, now it is better because now after taking price correction, we are at same level because we are buying at 200 and they are also buying at 200.
Right. So, and are there any further price cuts expected by us?
No, I don't think so.
Okay, got it. My next question would be around the Spark brand. Is there any competition from the organized sector, from other listed or other main large players in this sector, in this brand or this brand, Spark brand?
Yes, there are a lot of organized players, and there is a competition, no doubt about it. But we have a different market, different product portfolio, and the athleisure demand overall is increasing for every brand. Because the consumer trend is shifting towards fitness, lifestyle, health, so demand of athleisure footwear is going up. For the industry itself is growing up.
That is why we are doubling up the capacity.
Yeah.
Got it. And my last question would be around the contribution of Spark brand from its open footwear and from closed footwear. Is the open footwear competition, that is sandals, much higher compared to shoes?
No, it is the competition is both levels, sandals and shoes. It is not that competition is less in shoes or sandals. So it's an athleisure category. So it's growing category and the market is growing.
Got it. Okay, thank you.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, thanks for the opportunity. Just one question from my side. Usually we have seen that in a category where there is a large participation by unorganized sector, inflationary period is always beneficiary for organized players because of the scale, ability to manage supply chain volatility, and in procurement, planning, production. Understandably, they should have a upper end versus unorganized players. So in our case, it did not play out like that. So just wanted to understand, was it different in our case, or there were some more headwinds or unprecedented headwinds which did not allow us to capitalize on this opportunity?
As long as things were rising, we were in a better position. It is only because there was a decline of the price of our main material from 300 to 160, which we consume 1,000 tons a month. At that time, local market availability of the material came down at rupees 160, 180. But we have a long supply chain, which we are buying, our average price was 240 for the year. So it was just this 4 month period when they became advantageous because we have a long supply chain, they have a short supply chain. But this is once in a life it happens. The prices go down and they become advantageous. It's a very rare phenomena. It's just a matter of time. Otherwise, we cannot be dependent at all on local sources. They can't even serve us. Our factory will come to a halt. To have uninterrupted, no disruption manufacturing process, we have to maintain this sufficient inventory in the pipeline. During the lockdown period, even there was so much of scarcity of material, and even getting containers to ship the material became a challenge. So that is why we took little abundant precaution and had a little more stocking also, just to avoid any manufacturing disruption.
Fair point. And so just expanding that point, what percentage of your competition would be importing either raw material or finished goods from China, especially from unorganized?
I can't comment on that. I can tell you about ourselves.
Okay. No, I was asking was unorganized, not organized. But anyways, thanks.
Unorganized, their figures are not at all available to anybody. I don't even they pay GST to the government. I can't say anything.
Fair point, sir. Fair. Thanks and all the best.
Thank you. Ladies and gentlemen, due to time constraints, that was our last question. I now hand the conference over to the management for their closing comments.
Thank you all for joining the call. This is all from our side. Looking forward to join you again. Thank you.
Thank you. Ladies and gentlemen, on behalf of Motilal Oswal Financial Services Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.